Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on today's show. A lot to discuss. Down goes FedEx, down goes Micron, up goes General Mills, and it's a Fed day. That is probably the most important thing on everyone's radar today. We're going to get a Fed decision at 2 o'clock. That's what we're going to talk about with our guest, Jonathan Corpina, at 8:35. That's what we're going to talk about amongst ourselves. That's what we've been dreaming about it. We've been waiting for this day. It's here. So we've got that. We've got earnings. We've got a lot to discuss on our show. Joel, we'll jump right to it. We've got a chart of the S&Ps up. Give us what's happening in the overnight session.
We got a rally. What a crazy action late in the day. But the bottom line is, folks, we got a triple bottom in. 25.30 is your bogey. We're 27 handles above that. Pre-market high 62.75. Don't have much up there until Wednesday's high at 77. Tuesday's high at 77 and a quarter. So we got a pretty big range. Crude, after getting shellacked yesterday, not much of a rebound. Crude is trading up a dime here at boom, 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 46.71. We have gold in the red by 220, silver in the green by a couple pennies. But let's bring in a triple D here. And Dennis, are you excited for the Fed announcement today?
Always excited for everything. I'm just an excited guy.
You know what?
Don't I sound excited?
I know a few of you caught the pre-market show at 7:30 as we were doing some testing, but you guys missed one hell of a pre-market show at 7:45. Dennis, should we just let you rant for 15 minutes or so?
I'm so angry today. I looked at my investment portfolio. I shouldn't have looked.
Can't do that.
I shouldn't have looked. Don't ever look at your investment portfolio, your retirement portfolio, because you know what? Man, it has been rocked. I'm 40% cash. I still have been rocked. I don't even know how that's possible. I must be in all the wrong stocks. Anyways, I had one energy ETF. And it wasn't a huge amount of my portfolio, but it was a chunk of my portfolio. It's down 40% in 6 weeks. Is that possible? It's down 40% in 6 weeks. And then I start looking at these ETFs here and, looking at the XLE and looking at the OIH, which is a disaster. Looking at the looking at the XOP, another disaster. And I'm like, okay, I guess it makes sense. But holy cow, this has been an awful 2 months. I mean, we could talk about all these other stocks. Nothing has been hit harder than oil in the last 2 months. What are your thoughts here? Like, it just goes down every day.
Well,
we're up today, but is that going to last, or is it going to just go down again?
It's up 13 cents.
Yeah, I know. This is a green day. The good days are up 13 cents. Bad days are down $3. It's a disaster.
You know what? I haven't been catching this move, and you know how I love stuff on the short side. And I was lured. I didn't try from the long side. I was lured in here when you had that double bottom at 49.50. And then you had this consolidation, and I said to myself, it's going to break out of this consolidation. And just my contrarian ways, I thought it might break higher above 55. But you took out that double bottom a few days ago, actually on Tuesday, and you gave you one chance back at that area, 49.50, and now you're at 46.71. Basis your monthly charts here. Boom. I see 45.95 was the low in September, and then 44.97. But Dennis, what are you going to do? I mean, are you going to buy more? Are you going to?
I mean, I'm on a dividend reinvestment program on both of my retirement accounts. So obviously, the dividends that reinvest are the 3% dividends or whatever the hell it pays. That reinvests, every quarter when you get those. But I don't know. Like, I've been in a lot of this stuff for long term. I bought the energy. I wanted some energy exposure. I, obviously am disappointed in the performance in the last. It's like it takes some of these, and if you look at, the XLP or look at the XOP or the OIH, I mean, really, these have been terrible investments because they didn't really go up when oil was going up. And they've been annihilated when oil starts going down. I mean, we've talked about, the individual action, the Halliburtons and Schlumberger. I mean, Halliburton in May was $55. It's now 28. So call it a 2-for-1 stock split, but you didn't get the extra stock. Schlumberger $70 down to 37. There's a 2-for-1 stock split. RIG in the last this is a good one. In the last month and a half, so October was 14, it's now 7. Nice little 50% fall for RIG. I mean, I don't know what to say on these things. Are some of these going to go out of business? They sure as hell look like it.
Yeah, I mean, just another thing weighing on the market. As we discuss often on this show, we like to talk about the top components in the S&P. And there was a day when ExxonMobil was number 1 and Chevron was number 4 or 5. And now, Dennis, I tell you, the way this market's been moving and stuff, I mean, this top 10 and I do top 11 now because there's 2 Googles. I mean, it's volatile. I mean, these stocks are moving around. A haircut that Apple had got replaced by Microsoft. Facebook was up there. That's been replaced. Bank of America snuck into it. Then it had its haircut. So, man, volatility in the top 10 and volatility in the after hours trading. Let's cover a couple earnings reports here off the top.
More pain for me. This is my pain day, I guess.
Your pain day?
You want to start with Micron? Because obviously I have some Micron in my long-term portfolio. Sold half of it at 43, thank goodness. I ate the loss in my long-term portfolio on that because I was like, there's more going on here than meets the eye. It's now 31. I mean, the PE is like 3 or 4. If the PE, I joked yesterday with Nick on the show, but, a stock that has a PE of 3, if that PE goes to 2, that's a 33% fall for the stock. So it starts to get really violent when you have these low PEs. So anyways, whatever, their guidance is not great. They're only supposed to make $3 next quarter or something. But anyways, throw multiples and stuff out the window. We know it's cyclical. But at the same time, holy cow, man, here's another stock getting annihilated here. I mean, I just looked through my portfolio and there's carnage all over the place. And I thought I was conservative. So anyways. Go Micron. Give us the numbers.
Micron Q1 EPS $2.97 is beat by a penny. Sales 7.9 versus $8.02 billion. So a slight miss on sales, a slight miss on a slight beat on the EPS, but the guidance matters more. They gave that on the conference call. They said their Q2 EPS guidance would be $1.65 to $1.85. That's why the Q2 sales guidance $5.7 to $6.3 billion versus $7.3 billion estimate. So a big miss on the Q2 sales guidance. For what it's worth, though, I would say this, and Brendan can back me up because he listened to pretty much the entire Micron earnings call. It didn't sound like there was anything that Micron was doing that was bad. It's just a secular macro trend. For whatever that's worth, Dennis, it's not like the company is screwing up. It's just
and we knew this was cyclical.
It's a macro environment.
We knew it was cyclical earnings. It's just like you think like, okay, well they're making $6 or $7 or $10 a share or $12 a share at the top of it. Maybe they're going to make 4 or 5 at the bottom of it, and it's still cheap. I guess that's maybe not the case. I'm learning that the hard way here. I'm just happy I sold half the position at 43. I ate a loss. I was averaging at $57, which is just terrible. And I sold half at 43. I've still got half, and eating like not doing well at all. But definitely my worst investment of last year.
What got you? Dennis?
Everybody was saying it was going $100.
It was.
Everybody was saying it.
Yeah.
And I'm like, you know what? It's going straight up. Its PE is still cheap. I'll just buy some. I bought it right at the top of the cycle. Horrible. I'm not that good maybe at investing, Joe. Maybe I should stick with trading. I tell you something, though. When I look at my investment portfolio yesterday and I think, holy crap, I lost a lot of money. I'm doing damn good trading. These are the last 2 months trading, day trading, have been my best 2 months in 5 years. I lost more overall, though, because my investment portfolio went down more than I traded. So, I've got a little bit of net worth there. So, when it falls 15% or 12%, whatever the hell the market's fallen in the last, you're going to get dinged. But, it starts to make me think I should just sell everything, move to cash, and start buying and doing something else with the money.
Yeah.
Man, and maybe it's got to be the bottom when you start thinking thoughts like that. My wife had to slap me around a little bit saying, look, you don't care about the next week. You don't care about the next month. You care about 15, 20 years from now. Are these stocks going to be higher? And that's what, I was trying to do, go with the Warren Buffett approach, trying to buy good companies at reasonable prices, hoping that in the long run they work out. But I tell you, man, when you lose 12, 14% of your portfolio in a month and a half, it really ticks you off.
Dennis, I got a suggestion what you don't do with your money.
What?
Don't buy a Quinzos.
Yeah, well, I see. I've done some bad things. I bought Quiznos. I've done some bad investments, man.
I
Maybe I'm just a trader. Maybe I should just liquidate my portfolio and just
yes,
trade the hell out of
Dennis,
everything.
you're too emotional. Cut it out.
Dennis, you should, and then you should start trading all day, every day again, and just forget about it. Then you don't have to worry about the long term stuff.
I tell you, trading from 11 to 2 in the middle of the day, that's for the birds. I learned that a long time ago. And guys, I haven't said that on the show in a while. I do not trade midday. Never trade midday anymore. I used to trade all day every day. Now I don't trade midday. I take that time off because you know why? It's just too much chop in there. There's too much algorithmic trading. It's too difficult. There's no edge from 11 to 2 in my opinion. I think there's good edges at the open, good edges at the close, good edges pre-market, good edges after hours. Those are the edges that I exploit, and I exploit it on a consistent basis. So, if I look back at my sheets, I could analyze it, but I'm probably making money at least 4 out of 5 days, if not, maybe 17 out of 20 days every month. So whatever edges I have with my trading are very consistent. That being said, this passive investing crap is for the birds right now.
Dennis, and what about the street? I mean, have these guys backed off that $100 price target? Remember we were talking about that with Square?
There's so many price target moves even today, Joel. They're all backing off. Everybody, the guy that had the $35 price target, he was the one that was the smart one. There was one person that had that $35 price target on Micron was like $60, and everybody else went to 100. That was the smart one. That was the person we should get on the show here because he knows what the hell he's talking about.
All right, let's move on to another disaster, Dennis. And I don't think you have this one.
Hey, look, I don't have my portfolio.
Oh, wait a second. I didn't even give any. I was listening to you whine, and I didn't even give any Micron numbers here. Your pre-market low is 30.67, and you're trying to come off that right now. So 30.67, nice round number, like 30 may come into play. The level I want folks to keep an eye on the upside is 31.85. Since you made that low, that's been the high of the rebound, psychological $30 level if it comes into play. I also see a monthly low at 31.65. So, if you're short, buying between 30 and 31 might not be a bad idea. If you're looking to start a long in this thing, I think you may want to wait a day or two and let the dust settle. Maybe take a shot around 27 because in August of 2017, your low was 26.85. But let's move on to FedEx. And, Nick made a great point yesterday about the Amazon and the Amazon trucks. I mean, I don't know what the percentage of the FedEx business is Amazon, but holy smoke. Spencer, give us the report, which wasn't that bad, and then we'll go into the technicals.
Yeah, this one wasn't that bad, but the CEO was getting roasted on Twitter for his comments that he made during the call. But I'll give you the numbers first. Q2 EPS, $4.03 versus a $3.94 estimate. Sales 17.8 versus $17.75 billion. So a beat on the EPS, a beat on the sales, but they lowered their fiscal year guidance. Lowered the fiscal year EPS guidance, that is, by essentially $2 from the mid-17s to the mid-15s. And that was the adjusted. The GAAP EPS also cut, obviously. So a big EPS cut for the fiscal year for FedEx. And then on that call, the CEO did say, let's see, he blamed the political environment for their troubles, essentially. And he was getting roasted on Twitter for that. But that's the news on FedEx.
Down $13. I mean, it was crappy going into the number. It's crappy coming out of the number. It's just crap. Okay. I'm in a good mood, guys. I'm in a really good mood.
Okay.
I don't know what to say on FedEx. Is it getting cheap, from a valuation perspective? Sure. There's a lot of stocks that are getting cheap from a valuation perspective, but, I don't know. Maybe they got a point. That this Amazon, obviously we knew that they were coming for them. It's why I haven't been invested in FedEx, is because I've been nervous about Amazon eventually shipping their own products and shipping their own stuff. But I don't know. I mean, it's in a free fall. So if you want to be a hero, try to call it bottom. Sure, it's eventually due for a bounce. I mean, we're down 50, 60, down 60 handles in 10 days. I mean, it's down 20% in 10 days. Is it due for a bounce eventually? Sure. Where that bottom is, I don't know. Again, I'm going to say it.
I don't know.
Toughest thing to call. Calling a bottom on anything is the toughest thing to do.
And last night it kind of stalled at 173, 170, 173 and a half, 174. I'm like, hey, there may be a little buyer out there. But right now, someone has their foot on the accelerator. 170.80. That's the low of the session. That's where you're trading. It's probably offered there. 170 is destined to be hit here in the pre-market. So if you're trying to cover short or put a pre-market low, see where that pre-market low comes in, because let's see on monthly support here. Ooh, Dennis. You have two monthly lows, between 168, and this was October of 2016, and then 170.16. That was your low in November of 2016. So 168 to 170. If I had a big short position, that's where I'd be looking to bring some in, so I don't have to buy it when it eventually has some kind of rally today.
Let's go back to Micron for a second, because Griffin's bringing up a good point. I'm so angry about, the leader, that I didn't talk about the sympathy plays, and obviously there's supplier issues here as well. LRCX trade down 3% with this. There's a whole pile of them there that Griffin just listed off in our chat. If you're not on our chat, it's premarket.benzinga.com. Applied Materials, AMAT, obviously trading down as well. KLA 10 Core, KLAC is another one. So you got a ton of them that are going to probably be trading down with this Micron news. But one thing to consider is we have seen some of these stocks bounce back. I don't know if Micron's bouncing back here or not, but sometimes you see when these suppliers, they've been in the gutter. So I don't know if I'm coming here and selling them when they're in the hole like this. Again, I'm still going to put on my hat. It's buy dips and sell rips. If you're selling all these stocks this morning, you're selling the dip, and that's opposite of what I like to do.
What about their buyback and the dividend and buybacks promised last quarter? I thought someone
from LRCX.
Yeah. No, Micron. But wasn't someone?
Well, Micron never had dividend.
No, but the buyback. I thought that
they did. Well, they did it. I'm sure they did it already. They probably bought it all back at 50. If they were.
Okay. All right. Well, we'll just keep an eye on those levels. For FDX, I gave you the levels. Why don't we just go sympathy right here? UPS is trading in the red as well here. Getting the beats. That's just hanging above its pre-market low. Pre-market low for this issue comes in at 93.23. Boom. Let's see what I can find here. If you're looking for a monthly low, going back to 2016, this was February 2016. You had a 92.04 low, and that looks like a possible area. But let's get off all the negative. Let's go with a good report. And so let's go with Jabil Circuit.
Yeah, Jabil Circuit is trading up here. One thing to consider is that they just keep selling rips in this market. And I said it yesterday on Oracle, and I was serious when I was talking on this yesterday on Oracle. When it was up 48, I actually wanted to sell this out of my long-term portfolio just because it was up 5%. I was like, how long is that rally going to last? I thought it would last more than an hour, but it only lasted an hour, and they gave it all back. So is there going to be a stock that holds up? Maybe Jabil Circuit's going to hold up. It's up 9.86%. The SPOOs are up a little bit here today. But I'll tell you, you have been absolutely punished if you have been buying stocks on gap ups on good earnings. There is very few stocks that have actually held their gaps a week or two later. I mean, even Twilio, which was an excellent report when it reported back in November, 4 days later, gave it all back. So, I mean, this market is just punishing anyone who is buying the rips. So I'm definitely not buying Jabil Circuit because it's up. Can it continue? Sure, they can continue. But I've seen time and time again the last 2 months that these rips sometimes last for a few days, but it seems like eventually they come back down.
I'm glad you said that, Dennis, because this report was good, but it wasn't great. The adjusted EPS, 90 cents, beat an 88-cent estimate, and their sales was 6.5 versus $6.1 billion. So beats on both, but slight beats, and they beat because I bought some new headphones, so you're welcome there. The Q2 adjusted EPS guidance was in line. The Q2 sales guidance was in line. So in-line guidance and slight beats on earnings. Good report, but not a great report. So I feel you on that, Dennis.
There's all overhead supply all over the place here. Everybody's underwater in this thing. There's money managers that are looking to raise cash. What they raise cash in typically is stocks that are gapping up. I mean, this is a prime candidate for money managers to come in and say, thank you very much. I just got 10% of my money back in this dog, which it's been a dog. It's went from 30 to 22 in the last 3 months. And I don't think there's going to be anybody coming in here and saying, I want to buy this thing up 10% because they've seen what's been happening. Sell the rip hat is fully on here today. So it's up 10%. If I was long it, I'd ring the register. I don't know. I'm not probably going to short it because this will be the day that the gap and go happens. But we have seen some gap and goes. But it seems like they eventually stall out and then give it all back. Like, here's a question to the chat, and here's a question to Twitter. Can you guys find a couple of stocks that have actually gapped up on earnings, and not stocks that reported yesterday, stocks that have reported, and then and give it a week or two? Is there any stocks that really held on to those gains that have gapped up? There's got to be a few out there, but I was leafing through about 10, 12 charts. I couldn't find any. Now that was quick. I only gave it a 2-minute look, but there's got to be a few. Find me a couple stocks that have gapped up on good earnings here and held those gains and actually continued higher.
Okay, we got the chat.
I thought I gave you one, kind of.
What'd you give me?
Save, Spirit Airlines.
Well, no. Well, let's look at Save. It gapped up and went up to $65, so it gapped a little bit, but now it's leaked. It's leaked $7 of it back.
Oh, you guys
hanging there, looking like it wants to fill the gap.
You guys shouldn't.
I don't think that
chat. You shouldn't.
Good. NAV, but NAV only reported yesterday, so that doesn't count because we said you got to give it a week. I said sometimes those gains hold for a couple days, so we don't know NAV till a week from now. So I'm saying give it, nothing reported in the last week. So you got to go out further than a week. And we had a lot of stocks reporting. There's got to be a few.
I have another one. Another one. McCormick, MKC.
Yeah, but that's leaked $10 in the last. It's the same
Everything
thing.
is leaking a little bit.
Where is the gap up? That's not pretty. It's 155. It was running up. It's give back $10. WDAY Griffin is saying. But WDAY is already given back the gains too. It gapped up that day. Up to 170. So we've had 3-4 people, and they've given it back too. It's down 16 points from those highs. Hasn't held on. I mean, it's a victim of the overall market. All these stocks are a victim of the overall market, but it's just showing you. Sell these rips. If you can hold it for a little bit of through a little bit of pain, has been working. It's been working better than the buy the dips all those times. I don't know. It's gonna turn eventually. You don't see the market goes down. We're probably due for a Santa Claus rally, and I'm saying. I'm not saying I'm fully bearish here. I'm saying I'm ticked off. I'm ticked off at my investment portfolio, and I'm just looking here, and I'm like, you start analyzing. Should we really, ask the question: is long-term investing really the way to go, or should we just be swing trading everything and day trading everything and using our money, and doing other things with it? I don't know. The one consideration I've always had is I only need so much money to trade with. I'm a prop firm. I don't need millions of dollars to trade with to do my strat, millions of dollars of my own money to trade with. So what do you do with the money you make? That's always the question. What do you do with the money you make? I've always put it in investments. I've always put it in ETFs. I put it in conservative stuff, taking the Warren Buffett approach. It's worked pretty well in the last 3 or 4 years, 5 years. It's worked pretty well. But it hasn't worked well in the last year. And it definitely hasn't worked well in the last 2 months.
Have you set money aside for your kids' college?
I have 40% cash right now. Here.
Okay.
So, I mean, I'm complaining. There's some people that are 90 or 100% investor on margin. I feel sorry for those people. I'm 40% cash and I still got killed. So I can't imagine being, on margin investing in this environment.
That's a lot.
It's got to be just, and this is one thing. People have only seen, and we've been saying on the show, we said it for years. Eventually there's going to be some pain, and you can't just buy every dip. Relentlessly there, because yes, they've come back for years and years, but they don't always have to. And I kind of feel like we're in that market now where buying the dip, people who are just doing that, thinking that is a full-on good strategy, are getting crushed. And it hasn't worked. Not in the last couple of months anyways. And maybe it's going to work here. Maybe we're going to roar back and, have the greatest January and February we've ever seen and get all these losses back. But I feel like it could be different this time too. So that's why I'm sitting with 40% cash. I've not been 40% cash in my investment portfolio in a long time. So, I'm scared when I'm sitting with 40% cash. And I did that. We know when I did that. I talked on the show when I was doing it. I said back in October after we had the big sell-off in the first rip. I was talking to my good trader friend Chris Banya yesterday. Chris, if you're listening, I know you listen every once in a while. I'll give you a shout out. But, so what he said was exactly, and I hadn't talked to him for like a month and a half. And I was like, how you doing over in this? He's like, lucky I got out of a lot of stuff on that first short squeeze. So the good traders identify that, hey, in October, we had problems when you saw those big two huge candles from 290 to 270. First one was a short squeeze. Then we sold off again. Then we got a second shot. What was that? Another short squeeze, because it was obviously been proven. We've come back down. Gave you 3 chances to liquidate, 3 tops in the same area, that 280, and now we've collapsed. I don't think you're going to get another shot at 280 on the SPY. I think now the sellers are going to be moving down to the 265, 70 here.
Yep.
So they'll be moving down. But I mean, that's where, if you are concerned or if you are too long, you got to be, starting to raise some cash on the rips. And that's what I
did.
Good
question here. I mean, you're pretty good at calling the market overall and timing. And what about like hedging? I mean, have you, looking at your money? I know you hate options, but there's the SDS. There's certain things out there. I mean, have you ever considered doing that? I mean, for me, my hedging has been higher cash, and higher cash, and not putting new money to work in the market. And have you ever considered that?
Like hedging your overall, the whole thing, hedging the whole thing. The one issue is, what if you're wrong though? And this is what I've always kind of analyzed. Okay, so let's just say you're, Peter Schiff, or you're one of these perma bears that are out there. And the market, you call the market and you're saying everything's going to implode and everything's built on a house of cards and it's all going to eventually go down. Well, everybody gets killed in that event. Every single person gets killed in that event. So you're kind of equal to everybody else because everybody else is invested as well. I mean, you got, like the economy's going to suffer. Everybody's going to suffer. So you're really kind of still on equal ground if you stay invested. You kind of stay the course. You're pretty much on equal ground with everybody else, unless it's just a stock market thing, which it never is. I mean, if the stock market fell like 90%, like the Great Depression type deal, everybody's going to feel pain, right to people who aren't even invested in stocks, just because the overall economy is going to just be in shambles. So in that event, if you're fully invested in that event, you kind of stay you kind of stay the same to everybody else. If you go to 100% cash and you're wrong and the market takes off like it did in 2010, 2011, 2012 and triples in that time, well, now everybody, his net worth, relative to you has went up 3 times. Inflation will come in, prices will go in, and you're not participating, and that's where the issues come. So I've always been of the, and this is just longer term investing hat on right now. I've always been of the opinion that you want to have some stocks, some money invested in the markets, because if it continues to go, if we eventually get to Dow 100,000 and you have all your money in cash, you are going to be losing a lot to everyone else, meaning it's not, just meaning relative purchasing power, everything goes down. So that's why I always want to have some money invested in the market, in my own opinion. This is my investing hat on. I've invested in what I feel like good companies. I don't buy stocks, I've said before, with P's and 90. I buy stocks when the P's are lower. I've got Apple. I've just recently purchased Facebook because the P has gotten more reasonable. I'm buying stocks that I feel like in the long run, can be, good, long-term investments. So, but, when I'm nervous, I raise a little more cash. So I do play with it a bit. 40% is high. I mean, it's better saying he's 70% cash. That's awesome that you're 70% cash right now, because, but he still got hit even with 70% cash. I mean, there's a lot of people that are probably sitting with 90% invested or more and getting hit even harder. But I mean, you're trying to pick good companies, trying to go for the long run. So I try to stay fully invested. I don't think I'm ever going to hedge my portfolio and go 100% cash, or, and when you're hedging, that's what you're basically doing. Even if you hedge it, Joel, you're going 100% cash at that moment.
Yep.
So what if you're wrong? I mean, if you're wrong and you're invested, well, everybody gets hit at the same time. But if you're wrong and the market doubles and you were 100% cash, you got left in the dust. So that's why I think you always got to have a little bit of something invested in the market.
All right.
So, Spencer, you're young. You're starting to do some investing and stuff. What are your thoughts here on this?
I don't really have the. I mean, I'm my time horizon is way longer than yours, so I don't.
You're saying I'm an old man.
That's not what I meant. I don't really
How
have.
old are you, Spencer? How old are you now?
I
What?
think of
It's a dirty question.
That's
You're
not
not,
that's not a multiple choice question.
Yeah, exactly. It's almost
he doesn't want to say. If you don't want to say, you
He's
don't want to say.
26.
I'm 27. I'm 27.
Yeah, you got like 30 years ahead of you. So your time horizon be 30 years. So are you nervous about these market dips? Or are you saying maybe I should buy some stocks, a little bit more like of your, investable
No.
capital? Like do you like invest in, like you buy stocks when you get more like investable capital, or do you stick with a big cash hoard?
Yes, the only thing. No. Not a big cash hoard. I am the only thing that makes you nervous is the perennial fear that I'm underinvested.
Can I
That
interrupt you guys for a second?
Yeah.
And I'm sure no one cares except for me and William Ray, but Daxton Hill flipped back to Michigan. He was in Michigan. He went to Bama. Now he just flipped back to Michigan. Number 3 player in the country. Go blue. Sorry about that. I had to get that in there.
Okay, so my perennial fear is that I'm underinvested. I don't care about like this like 3-month dip we've been having. I'm perennially afraid, constantly afraid that I don't have enough money, that I have too much money on the sidelines, and not enough money doing work for me. That's my fear. So I'm the opposite of you, I suppose, because I'm always afraid that I don't have enough in the market, always, so I don't know how to solve that problem. But if you know a good therapist, let me know.
And I've had that same fear every time we rally. My fear of missing out, call it fear of missing out, but fear of like just being too basically underinvested in this market. It gets me scared. Like when we were out, I feel actually really, when we were rallying in late November, I was sitting with 40% cash. I kind of was puking a little bit too. Now that my portfolio goes down significantly, and I'm puking when I look at that too. I mean, I guess I'm just maybe a negative person. Maybe I should get more positive and just say, hey, 5-10 years down the road, in all likelihood, the market is going to be higher, but I don't know.
Okay, a lot of rants today. We got 2 minutes here, and let's talk about a stock that Dennis is probably going to sell his XLE and go all in because he picked the bottom in General Electric.
Do you think I got it? Do you think I've got the bottom?
I mean, we got to give Spencer credit on
Anyways,
that.
I don't own it anymore, but do you think I called the bottom?
I mean, it's a temporary bottom. I mean, it's hard to argue that, right?
What's the news here today driving it?
News today is that they filed confidentially for an IPO of their health unit.
So the stock's trading up here again. I mean, I bought this stock yesterday. I actually made the journal in this one. I bought the low of the day. So I bought the open. I said, I liked it on pullbacks. There was open. It opened basically flat on a day we were up substantially there. So I got the open, 716. I flipped out. I actually played it twice. I bought 716 after hours. I sold like 726 in the pre-market. I re-got 716, and then I sold it like 727 or 728. The scalper blooded me, right? But anyways, 762. So, I should have stuck a little bit in the swing trade portfolio and held on to it. I've been saying I think it could see $8. I said it on the show yesterday. I'll say it again.
Wow.
I think it's going $8. And I don't know what it does after that, but I think you got a good shot. So if you're in it, congratulations. At 762, I think you got room to 8 here.
All right. Yesterday's high is what we're going to be focusing on. 763. We did trade up over that in the pre-market to 773. So there you go. But really a clear path to $8. Maybe all the end of the year tax selling is, maybe people got it out of the way early, but you're not really looking at a gap fill. So that's, if you could have traded in yesterday's range. So that's a good thing. Probably some paper stacking up at $8 as well. All right, it's 8:35 here, and we're going to take a break. And we have Jonathan Corpina coming on the show, and we're going to get a view from the floor and see what people are buying and selling.
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, how's it going this morning?
Gentlemen, good morning. Thanks for having me.
All right. Go for it.
Okay, Jonathan, I mean, here we are coming into the end of the year. And what did you do with Santa Claus?
Yeah, that proverbial Santa Claus rally has really disappeared. I think kind of heading into the month, everyone was hoping for that, but clearly the trading activity has shown us that that's not going to happen. We're running out of days here. We're running out of excuses, and maybe this is good. Maybe this is the washout that everyone has been talking about, right? I mean, the market has had a tremendous run over a long period of time, and as the market was continuing to move higher and higher, everyone continually talked about what was going to be the catalyst, what was going to be the downturn, where is the top, when's it going to happen. So I kind of think that not one real factor has caused this. I think there's many different ingredients that are in this pot here that are kind of all coming together at the same time. But I think investors kind of feel like they've watched this market move up and down, and now it's time to wait for 2019 to come along and do nothing at this point.
All right, so how do you determine whether this is just another correct? I mean, what would make you very bearish this market overall long term? Because to me, you got the three bottoms there at 25.30, kind of been the bottom of the trading range, going back all the way to September of 2017. To me, and I'll give it a little more room of pre to 2,500. Where's your line in the sand for as opposed to like they're already calling it so much a lot of indices and a lot of things are in a bear market. What would you for your long-term stuff and for your clients say, hey, we're going down to 2,100, 2,200, or even 2,000?
I don't think we have that much more room to the bottom here. The thing I would want is kind of macro, right? We continually talk about tariffs. We continually talk about interest rates. We continually talk about oil. I think on all three of those fronts, if we can just get a little clarity or just some certainty as to where we're going to go. The tariff topic has been a continual topic, and as it goes longer and longer, it gets grayer and grayer. So I think if we can get some clarity out of Washington in that, I think that would be very helpful, just so investors can get a better understanding of what the landscape is going to look like moving forward. Interest rates, we're going to talk about that today. We're going to hear from the Fed. Kind of interesting how that's going to play out. Don't have too much of a strong opinion on this one just because you never know what the Fed's going to do and how they're going to do it. There are two camps that are at the Fed. One is we're going to remain data dependent, and we're going to continue on the course that we've continued and that blueprint that we've set over time. And then we'll kind of wait and see how 2019 plays out. And then the other side is that, well, look at the market turmoil that we've seen over the last 6 weeks, and look at all the indecisiveness that we've seen on geopolitical issues and overall global economy. We're going to use this as an excuse to take a pause at this point, and once again see how 2019 plays out. So either way they go here, I think the overall message is they're probably going to slow down or going to have to slow down for 2019. It just comes down to what's the wording going to be and what's the excuse that they're going to use. And then that third factor is oil. We've been continually talking about oil beginning of the year. We were talking about $80 price targets, and now we're trading below 50. I think that's something that can be concerning over time. I mean, clearly we're going to see volatility in oil, and as OPEC flexes their muscles, and we've got other oil producing countries out there that have their stake in the sand, so to speak. Once we get some stability there, I think that will be helpful for overall markets. So I think long term, we're not going to have a tremendous amount of additional pressure on this market. I think we've seen the flush out. I think we're going to have to just kind of weather this out for the next 3 or 4 weeks here and just get through the end of the year and the beginning of next year. And then once we get, halfway through that first quarter or towards the end of the first quarter, I think things start to rebound.
Any sectors on your radar still that you'd like to highlight here as been picked up and maybe forming a bottom?
Listen, I think everything everything has gotten beaten up over time. As oil comes in, you see the basic materials have been down, pretty significant. Financials have been punched around a bit, tying that to interest rates and overall, world currencies and how tariffs are going to play out and trickle down. I think across the board, we've seen significant pressure on the markets. Listen, I think at this point, when you're looking at certain sectors that are down 10, 15%, I think anyone you can really dip your toe into. Financials is clearly one that I've been watching as far as, trading patterns are there and how that's affected by interest rates. And once again, if we start to see some stability in oil, I think basic materials might be an area to step into.
And what are you thinking out of the Fed today? You think they're going to come to the president?
I think they don't want to succumb to the president, or they don't want it to appear that they are succumbing to the president. But I think doing nothing this meeting is the right thing to do. And how they spin it,
okay.
How the wording comes out where it shows that they're not listening to the president and they've got enough backing behind why they should be taking a pause at this point. I think that's going to be the more important message. Clearly, I think if they do not raise interest rates, we are going to see some tweets out of Washington saying, see, the Fed listened to me. But I think, hopefully everyone's smart enough to understand that we're in this together. There are many different factors that have them and help them make their decisions. I don't think their direction is going to be coming from the Oval Office.
And you think I'm sorry. Go ahead.
No, Jonathan, I was going to say, one way or the other, raise or not, we're going to get to Washington. You'd have to think. But my one question is, where we've been talking a lot past 2 weeks about where people are hiding, where investors are hiding. Where are you hiding right now? In cash?
No, listen, I am more of a long-term investor. I don't play it in and out of the market. If you look at a chart of the market this year, yes, it looks choppy, but if you look at a market, map of the last 5 years, you've had some pretty significant returns at that point. So I'm not really trying to time this. I'm not really trying to game this because there's so many different factors out there that can shift this market back and forth. I think overall, when you're looking at more of a macro, the temperature of our markets, yes, our economy has gotten better over the past 10 years. Our job markets have gotten better. The sentiment, investor sentiment, consumer sentiment, all of this has gotten better. So from my point of view, I like to weather the storm out. I'm not going to panic at any point. I kind of played that role in 2008 and 2009 to, kind of let things calm themselves down. But overall, I'm not looking to time this market because if you do, sometimes you win, but more of the times you might lose out on that one.
We've been on the line with Jonathan Corpina. He works with Meridian Equity Partners. Down on the floor. Have a good holiday season. We'll be checking in with you after the first of the year. Thanks a lot, Jonathan. We really appreciate you coming on the show as usual.
Guys, thanks for your time. Loved working with you in 2018. Have a happy and healthy, and I'll see you in 2019.
Okay.
Have a good one, man.
Thank you. Take care.
Okay, folks, sorry about the audio. He's down on the floor in the pits and on a cell phone. So Spence never really had that problem before. S&Ps have peaked off their high of 62.75. I have absolutely nothing there as far as a resistance level. Tuesday's high is way up at 77.25. That would be a target on the upside. Coming back on the downside, mid-range is at 45.25. So we got a lot to look at here. Looking forward in the markets.
Let's talk Facebook. There is more news from Facebook here this morning. I do have this one in my long-term portfolio. Thoughts here? First the news, and then we'll get Joel's thoughts here on Facebook.
Okay.
The news is that they responded to allegations in the New York Times that they basically, in spite of their own privacy options, they essentially didn't matter because they let big tech companies get around your own personal privacy settings on your profile to do things like track your location and etc. So they responded to that article this morning. That's what the volatility, or that was from, yes, that's this morning, and that's what the volatility is from. Just another data privacy concern.
More of the same. I mean, this is what's knocked it down before. The one thing about Facebook is we are significantly off the lows. And Facebook yesterday showed a lot of relative strength. So, I've had, and I am going to talk my book here a little bit, but I guess it's my long-term book. I don't mind this pullback as a buying opportunity in Facebook here. I don't know what, and maybe it's just for a trade. And I think if I was doing it, I would want to stop out at the low from 2 days ago, 138.42. But I think this sets up well. Maybe you get down there, maybe you test that 139.83 low, 140. And then you got a line in the sand for 138.42. But I don't mind this as for a swing trade pullback because I liked the relative strength in it yesterday. Held up fairly well. Some of the names did hold up, and obviously, yesterday was, a day that was up. So I shouldn't say. Were we up yesterday? Did we end up in the green yesterday?
We ended up.
It was really close.
No, we ended in the red actually.
We ended in the red by 30 cents.
Yeah.
But Facebook held up very well yesterday. And Facebook yesterday was up, I'm just looking 140 to 143, had a really good trading day, despite a lot of weakness in a lot of other stocks. So, you know what? Relative strength yesterday, I feel like there's buyers in here. So I think there might be some people looking at this dip in Facebook to get in. So I like this as a swing trade long. Stopping out, my stop out again, we see how I always set up trades. Always know where your out is. I stop up below that 138.42 low, though.
Okay. All right. And that's your 2-day low here. I will just go out a little bit longer term here on this one. And what I will say is that you had a move from basically 127 to 147. Yeah, nice 20-point bump off the low. I'd be more interested in this thing at the 137.5, 138 area on a 50% retracement. But Dennis is trying to strike quick on this one, and I see the setup that he's talking about. But for me, longer term, I'd like to see it 137.5, 138 for Facebook. And trading at the lows of the pre-market session, you had a couple spikes down to under 141. Pre-market low stands at 140.70, so you're 70 cents above that. All right.
Jumping over. Where do you want to go? Mr. Israel, lead the way.
Hey,
you got some good earnings.
Yeah.
Should we go to GIS, General Mills?
Yeah, I wanted to do GIS, and then I just saw that Winnebago is up this morning. So, but that's the GIS, though. That's the one that matters, at least compared to Winnebago. Q2 EPS for GIS, General Mills, 85 cents versus an 82-cent estimate. Sales 4.4 versus $4.52 million. So a mixed report there. They did reaffirm their fiscal year guidance in terms of EPS and organic net sales. And where are we this morning?
Can I just say, before we even look at the pre-market action, if you've been hiding in the defensive food stocks in the last month and a half, you got hit almost harder than the market. GIS in the last month has went from 46 to 36. That's incredible. What are they not going to eat cereal anymore? Kellogg's, same thing. $70 month and a half ago, $58. Obviously, it's up here this morning because of GIS. But I mean, Kraft Heinz. I got out of it. Lucky I got out of it. I think Joel might still be in it.
Yeah.
It's went from 60 down to 46. And we can just keep looking. Campbell's Soup has held on because there was the activist in there, and we didn't know. It hasn't done as poorly as some of the other ones. But man, these food stocks, which are supposed to be defensive and supposed to hold up in a down market, have not held up at all. And in the case of GIS, have done worse than the market. So I don't know. It's got a 5.1% dividend. Historically, you think, well, eventually you're going to find a bottom here somewhere. But we are now at like 7 or 8 year lows on GIS. So here, we get a lift here on the earnings. But again, is it going to just take off? No, because everybody's underwater in the thing. Coming into so much overhead supply. Who knows? 30, but you got like a little double top there on 39. I mean, I don't think this just blasts off into orbit because I think you got too many people who are along the thing thinking it was defensive, saying, thank you, I'm getting some of my money back, I'm going to ring the register. So I guess I'm going to be a seller rip on this one too. But long-term hat on this, man, some of these food stocks are dirt cheap. So I think if you were buying GIS at 36 or $37, and stick it into your long-term portfolio for the next 25 years, I think you're probably going to be happy that you did that, but I'm not like convicted, and I'm not doing it. And I don't own any food stocks in my long-term portfolio, but they're on. I'm looking at them as starting to get maybe too cheap, and the P's aren't great on some of these either. Maybe that's why they've come off. But holy cow, I mean, 5% dividend on GIS is pretty nice.
Pre-market high snuck above $39. That would be $39.03. You're only 50 cents off it, so you may take another run at it up $1.74 at 38.44. I'll go to the dailies here. I don't have anything right for you at 39, but man, if you sneak above 39 and you get to 39.40, that splits the pair of highs that you had on the 11th and 12th. The longer it takes you to get over 39, I think you might roll over and back it fill in here. Also, I mean, this one you would have more of a shot to buy it at the 50% retracement. If it does make a high, let's say at 39.5, it'll be easier to figure. But Griffin 11 points out here. What are millennial eating? What are people eating? Like, what food stocks? I mean, you got to buy tofu and granola? I mean, what are people eating? Spencer, what do you eat?
I'll tell you, I eat Blue Apron meals every day.
Oh, that's helping that stock out.
Is that a joke, I hope? Or isn't it? Or do you eat Blue Apron?
No, that's a joke. I've never had that.
Who eats Blue Apron? There's got to be a few people that eat it out there. I don't know. Enjoy your Blue Apron while you can, because this looks like it's on the road to zero. And we were joking the pre-market. You were saying, well, it is zero. It's 0.86. We were saying maybe we should just make a rule once they go, with the handle of zero, that they basically are a zero. Anyways, it's been terrible. This has got to be one of the worst stocks that, here we are. We IPO'd just over a year and a half ago at $10, went up to 11 for a day, and it's been straight down ever since. I mean, the story, I think it's over. At least I think it is. It's 89 cents here now. Awful.
Vegan Trader says tofu is good, so don't dish on that. But the other thing I can't figure out is people aren't eating food, but they're not really. Maybe that's why they don't need Weight Watchers anymore. Have you looked at the chart of Weight Watchers, Dennis?
Yeah, Oprah's losing some weight again here. It looks like, at least in her investment portfolio. Wowzers, 80 down to $44 in the last 3 months. I mean, I guess when I'm complaining that I've lost in putting it all in perspective, my portfolio, I think, is down to basically the market. It's down 12%, 13%. And, I'm complaining about it. But I don't like losing 13% in the matter of two months. But I mean, you could be in a lot of stocks that have done a hell of a lot worse than that. I mean, this Weight Watchers in the last 3 months has almost been cut in half. And there's just so many other stocks that look the same. I mean, here was a stock back in July, $104, and just got ridiculously overdone. I mean, yeah, they have an online thing. Yeah, and, maybe they were trying to reinvent themselves to a certain extent. But this was also a stock that in 2015 everybody thought was going out of business when they sold it down to $3. It got Oprah defending it, had the big rip up, and it just continued for basically 2 years, way overdone to 100. I don't think you're ever seeing $100, and we should never say never, but I think it's going to be a long, long time before this is ever getting back to $100 here again. And to be honest with you, the path of least resistance on this is probably still lower.
Did she sell any stock? Because that'd be interesting to see if she sold anything.
Well, Griffin says she took her original investment out.
Yeah. Okay.
So that's always something to do too. And I mean, I've done that in some cases too. I used to always do it when I'd have a stock in my investment portfolio and would double. I'd sell half, and then I'm completely playing with the house's money. I haven't done that recently, and I have a few stocks that I've done really well, like the Oracle. I said I finally sold a little bit there just a few months ago, but it's not a bad strategy. When we got these long-term investments, and double it, it doubles on you. Sell half, you're playing with the house's money. It's not bad.
All right. We got some tickers coming in here, and we only have Dennis for 5 more minutes. So what we're going to do is we're going to finish up with our regularly scheduled broadcasting, and then I will stay on here a few minutes after 9 a.m. and go over a few charts here. So people, you want to pop those in there, we'll go over that in just a few minutes here. Dennis, going back to the original content, I know we go off on a lot of different tangents here. Anything we're missing here, Spencer? There wasn't too much in ratings land. Is there anything that's sticking out?
No, pretty quiet this morning in ratings land. There was a note on some restaurant stocks that I saw. Shake Shack caught an upgrade. Darden caught an upgrade. Bloomin' Brands caught an upgrade. What else was upgraded? Rent-A-Center. Well, they had the deal collapse there. Upgraded at Stiefel.
But that's coming back. Did you see that, Dennis? Did you see the Rent-A-Center?
Yeah, I don't know if there's going to be a deal. Somebody was saying they're better off without the deal. That's impressive.
Yeah.
Coming back. I don't follow the story at all, so I'll just reserve my comment. But very impressive to be coming back.
Didn't realize the deal was back on the table. No downgrades of note this morning, and just those handful of upgrades that I mentioned. Anything else?
Best Buy was upgraded. You get that one? Moffat Nath.
Best Buy and Medtronic upgraded. JP Morgan.
Shake Shack upgraded too.
I said that. Baker Hughes, GE upgraded. Credit Suisse. That's all I got.
Okay, all right.
Few upgrades. It was nothing really like, convicted and saying, whoa, you got to check this out. The only thing I still like from alongside is GE. I'm not chasing it up here at 758. It's up too much now. But I still think it's going to go to 8. I think if you're in, I think I'd be holding it, and I'd be going for like that 799 if I was in it. But if for whatever reason it decides not to open that high, like opens like 745 or 750, I'll try from alongside. So I think this could see 8 sooner than later.
And what about David mentions this stock and Riot Blockchain, man. When is the last time we mentioned that stock? The old blockchain thing about a year ago. He's like, are we still considering this? And I think it's up a quarter here. What's the news? It's up 20. It's up 14%.
We're not. This is part of the Barry Honig scam that he was running with a few other stocks. Tickers were Cool and Mara, and then Riot was the other one. There's nothing to see here, folks. Nothing to see here.
I mean, it's up 14%. I think when we look at this a year from now, it's lower than $2. I think if you're trading these things, that's one thing. Just don't let it get away from you because we've been bearish this thing ever since birth. I mean, it did go to 40, but it's obviously come significantly down from those highs. I don't think there's a story here either. I agree with Spencer. I think all rallies to be sold in Riot, but I'm not shorting either because it's hard to make money short $2 stocks. I go to 3 on you, and you lose 50% of your money. So
okay, what about Dennis? I just pulled up the SIBO futures on Bitcoin here, and I mean, it put in a little bit of a bottom here. Look at this. Just about a year ago since we did the show, it came down, made a low at 3105, then 3175 and 3155, and now knocking on the door of 4,000 here. I mean,
Bitcoin's showing some life.
Yep.
And, nothing goes straight down. We've had a pretty wicked sell-off from 6,000 to 3,000 very quickly. So it's not surprising that you'd get a 50% retracement, say 4,500. Really we can only trade technically because it's really, I don't know, from a fundamental base, I don't know how you analyze that thing unless you're the Lee guy there who hasn't done a very good job analyzing because he thought it was going 25,000 by the end of the year. It got closer to 2,500. But 50% retracement, 4,500. If I was long, I'd maybe say that's my line where I'd probably lighten up or get out. But that's just my thoughts here. Long term, I'm still not a believer in crypto. So,
Dennis, what about Tilray from yesterday?
It was a good headline that I had yesterday, and it was nice, and it's continued up here. What's the headline this morning? More?
No headline this morning. Just I was asking about the headlines from yesterday about their Novartis partnership.
Yeah, showing life. I mean, and it was a nice move there for Tilray. I still own the Aurora Cannabis, the only one I got in the portfolio. I'm starting to get itchy with it, though. The chart's not looking that good. I just am hoping that somebody's going to maybe throw an investment at it, too, and it's going to pull a CRON or CGC that did back in the day or, one of these. But I think all these pot stocks, I've got a short leash on this one, too. I know Afria got some love from Citron there or something yesterday as well. But short leash for all these pod stocks, although some of them are starting to show some life. I know Spinner and NBev in the chat has shown some life as well. Not a great day for it yesterday, reversed a bit, but some of them have shown a little bit of life.
Okay, Dennis, it's 9 a.m. here. We're going to let you hop off and get ready for the open. I have, I don't know, about 6, 7, 8, 9 tickers here that I wrote down, and I'm just going to try and just go to the daily here real quickly. I'm not, when we do these kind of segments, I don't, get too caught up in the pre-market trading. I assume we have a lot of swing traders and longer term investors here. So not focusing as much on the pre-market and looking a little bit farther out. So the first stock, I don't think I've ever traded, KEM, Chemet Corp. Well, the overall trend is not your friend here on the daily. I guess if you're looking at this at a swing trade here, you can enter it at this area. You have a nice bottom at $16, but beyond that, I think you have to cut out. On the upside, I mean, you had the big rally, then you already lost the 50% retracement. So I would go ahead and figure that out. 16 to 23, that's 3.5. Really needs to get back and hold 19.5 to start heading north here in Chemet Corp. We got a question about WLL, William Petroleum. I imagine this chart is not looking pretty here. It's up 43 cents here. Not sure what the news is. Maybe wait to see if it can fill this gap area here. A lot of times you see stocks have a big rally and create a gap in that. So between 23.71 and 24.48, I think you started to work in that gap yesterday. A little bit. 24.05 was the low. So, you're taking a shot down here. You're fading a major downtrend, and you surely need oil to turn around in order to help this issue. Next, we'll go to the House of Mouse, Disney. Hit 120. I believe that wasn't an all-time high, and we pulled back here just like the rest of the market. One low that's sticking out to me is 108.23. We're pretty close to that. The only problem, if you're buying here at 109.45 and you don't cut out under 108.23 here, you see these two out of three huge candles here. When stocks go quickly through an area, they come quickly back down through an area. So be leaning on the 108.23 low. I'm sure you're going to need a lot of help from Mr. Market in order for this one to turn around. The next stock is NVIDIA, NVDA. Let's see. I'm sure that was not helped out by the Micron news, trading down $1.42. You've had the rally. You've already given back the 50%. So I'd figure with that level, and until it got back above there, I would not look for a continuation rally. Longer term, if you really think this is the bottom, you had that 133.31 low. So if you want to risk $13, $14 in hopes of making, 18 to 20, there's the risk-reward ratio. Maybe if you come down here and you could hold this 2-day low at 141.24, maybe you can bump up and use that as a stop, because that 141.24, boom. That's it really opens up after that. On the downside, so we got that. We already talked about Riot. Someone was talking as a potential blockchain play, Overstock.com. I thought they were supposed to create their own stock market, but they haven't. This is just stay away. Maybe put
that wasn't quite it. It was their own platform, blockchain-backed platform to prevent naked shorting. Is what they were trying to stop.
Yeah, actually, I tried to get the guy on from there from the FinTech Awards, but he was kind of hard to get a hold of. So maybe I'll try him again. Let's take a look here for T Mac. He's asking about VIPs, and I think that's an ADR. So let me take a look at this one. Low price stock, long consolidation. I'd say the party won't get started until you get back over $6. You can see the highs there. Coming on the downside, you're kind of putting a hard bottom in here. It looks like it 510, 520. So Not a super sexy stock here. Maybe it's been in a trading range from 5 to 6 pretty much since November. So you're getting back to the lower end of that trading range. And also for TT back, QIWI. Let's see if we can pull that one up for our folks at home. That's a tough symbol. And that one, let's see, anything in the pre-market? No, not going much in the pre-market. And a little bit of a trading range too. To really get things going to the upside, I'd like to see this clear the triple top at 1523 to 1527. Coming back on the downside, if you want to lean on a stop here, 1412 was your 2-day low, and 1411 was your low back earlier. Was that in November? Yeah, that was the low on November 26 here. And the Chinese online apparel. So if you take a look at what's that, Stitch Fix? SF, is that the online apparel one too? So if you're taking any clues from that one, I'm not sure you want to be long this issue. Though I got 3 bottoms in there if you want to lean on that, but that is a very ugly chart. And then let's wrap up with Twitter. Who is looking to short Twitter today? Stargazer. Interesting chart. I'm a perma long in Twitter in my retirement portfolio, so I don't short it that often. Let's see what happens. You got a pair of lows to lead on, 33.20, also 33.08, so under $33. You're at 33.69. Had a nice run up. Instead of trying to short this, I would look for maybe a rewind. You went to 27 to 37, $32. I'd like to see it come back in there and maybe nibble on it ahead of its first earning report. Stargazer, just flip one more in there, and this is absolutely the last one, folks. Roku, holy mackerel. What an ugly looking chart there. They have just walked this thing down since here, lost 40 points, over half its value. Area of interest here, and I'm looking, it made the new low of the day yesterday, trading up 36 cents. Go back to April and May and look at all those lows. 31.15, 30.69, 31.27, 31.61, 31 and a quarter. So you are finding low support in the lower to 31 handle. If you want to lean on that, sure, go ahead. You did have big buyers in there in April and May, and that was for its run up over $75. All right, wrap up with the S&Ps. We've been leaking here since we've been on the show. Gonna have maybe a little trading range as people try and jockey for position ahead of the Fed announcement. Mid-range on the sessions, the first stopping point I see on the downside, 25.45 and a quarter. Then you have the close at 38 even. Coming back up, 62.75 at your pre-market high. Maybe we'll just have a quiet old range ahead of the report. So, okay, Spencer, you want to wrap things up and then preview Thursday's show?
I can do that. Thank you for listening to our show, for sticking with us past the usual 9 o'clock ending. If you missed any part, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch our show on youtube.com/Benzinga TV. Thanks to our guest, Jonathan Corpina. Big guest on tomorrow's show. She is one of our most requested guests, Anne-Marie Band, who was last... She was last on whatever that day was, October 15th or something like that, when we had that first big whoosh down. She was on right after that, and she talked some sense into us. She calmed us down. She told us to sell rips, and she's going to be on our show tomorrow at 8:15 to give us an updated perspective on how we're looking here. So that'll be on tomorrow's show. Once again, thanks to everyone in our chats, both on YouTube and premarket.benzinga.com. Please remember that everything we say on our show is for informational purposes only and not meant to be investing advice. And on that note, everyone have a good rest of your day, and we'll see you on Thursday, eyes glued towards the Fed.